Hi, I'm Jim Wells. I'm a member of the Best of Us Investors community. I hope you will join us and become a part of it. How am I going to do this video? Well, first of all, I'm going to give you the sources. I'm using the article Seeking Alpha. The federal government, or the Fed, has shut down its money supply data. That was from April 14th, 2021. Seeking Alpha was the site for that. The balance, U.S. national debt by year compared to GDP and major events, March 25th, 2021. Recent. Investopedia, National Debt Explained, January 22nd, 2021. So I'm really going to try to give you the information that I think is extremely important. I'm going to try to leave my bias out of the equation, which is going to be very difficult because I feel very strongly about these points. But this is what came across my news feed.
Best of Us Investors presents Jim Wells.
And the Federal Reserve has shut down its money supply data as money supply has increased over 500%, and inflation is shown to be a major threat. It's kind of interesting that they're no longer giving out any information. It's not available. The money supply is up 30% in the past year. The financial crisis is coming and fears that they stopped reporting the money supply because they believe they will need to produce even more money to pump up the economy. We're all aware of that. This making inflation a major threat. In a recent video, Michael Cohen, who I had a difficult time finding out exactly who Michael Cohen is, so I'm just going to call him a Seeking Alpha source, said that the Federal Reserve has stopped recording the increase in the money supply, which he said is a major crime against the American people. I'm sure they might know, but they're not making us aware of it. As the government pumps more money into the economy, it makes your money worth less and less. The M1 money supply, which is basically, M1 money is basically the hard cash that is very liquid. It's the cash notes and the coins that the government produces, has increased by 450% in 1 year. And yet they say no inflation is coming. The N2 money supply, which is made up of savings and mutual funds and basically all of the federal monetary assets, that's gone up 30% in the past year. Cohen said that a financial crisis is coming and fears that they stopped reporting the money supply because they believe they will need to produce even more money to pump into the economy. If they do that, inflation is about to hit very hard. Central banks are now saying they can increase the money supply by 500% and it won't affect inflation and it won't debase the currencies. Cohen said those are lies. You can't print money and not have debasement of currency and inflation. Basic economics states that fact. The government stopping public access to money supply information is extremely worrying. Central banks can be a threat, as is happening now. By printing money, they're looting the economy. They're buying bonds, corporate debt, stocks, and other assets, which make the billionaires wealthier and destroys the middle class. If you hold dollars, get out of them now before they lose even more value. The 10-year note is starting to show inflationary tendencies. The rate is 1.6 and has reached 1.77 recently. The market is telling us in the 10-year note, which has risen from 0.51 in August of 2020 to 1.66 today, that inflation is coming. Rates have tripled in just a few months. Now the balance, all the information up to this point has been from the Seeking Alpha article. This is from the balance that basically talks about the national debt and its relationship to GDP. Since the bank bailout of 2008, the national debt has continued to raise at an alarming rate, from 10 trillion in 2008 to 23 trillion in 2019. And in 2020, because of COVID, it has increased to 28 trillion. We're all aware of that. But this is something that is not advertised. Debt to gross domestic product ratio has increased from 2008 from 68% to 129%. The GDP yearly revenue of the US currently is $21 trillion. That's how much revenue the US makes on a yearly basis. Compared to our national debt, which is 28 trillion. That gives you a ratio of 129%. That's an alarming increase since 2008, when there was a bailout. We were only at that 68% range. So it's almost doubled. Investopedia, excerpts from an article, increase the risk of government default. Okay, this reduces the amount of tax revenue available to spend on other government services, because more tax revenues have to be paid out as interest on the national debt incurs. So there is a much higher increased risk of government default. What will that cause? Over time, this shift in expenditures will cause people to experience a lower standard of living and a depreciating US dollar, as borrowing for economic enhancement projects becomes more difficult. Monetization is one of the things that the federal government can do, and that's what they have done. They've started to print money at an alarming rate. A country with its own fiat currency can always simply create as much money as it owes in order to pay its debts, if those debts are denominated in its currency. This is referred to as debt monetization. However, there's a limit to how much debt can be monetized before a country starts suffering from inflation or even hyperinflation. Efforts to monetize debt have often pushed countries well past that point. Monetizing debt can also make creditors less likely to lend to a country if inflation significantly lowers the value of what the creditors are repaid. That's where we're headed because of the amount of money that is being spent. We have no idea the amount that is being printed. Okay, interest rate manipulation. Maintaining low interest rates, which that's one of the other methods they have used, is one method that government seeks to stimulate the economy, generate tax revenue, and ultimately reduce the national debt. That hasn't worked. Lower interest rates make it easy for individuals and businesses to borrow money. But are we just supporting zombie companies? Where is the money going to? In turn, the borrowers spend that money on goods and services, which creates jobs and tax revenues. Low interest rates have been employed by the United States, the European Union, and the United Kingdom and other nations with some degree of success. That noted, interest rates kept at or near zero for extended periods of time have not proved to be a solution for debt-ridden governments. That is an awful lot of evidence to suggest that inflation or hyperinflation is on the way, and that the value of the US dollar will be decreasing. You're not going to find this kind of news coverage on the main news sources. You don't see this on the Wall Street Journal as of late. You don't see this in the Washington Post. These are secondary news sources, but that doesn't make it any less real or any less wrong that the US government is not, the Federal Reserve is not sharing or being transparent about how much money they're printing and where they're spending their money. This is a major issue moving forward for this economy. People with this school of thought, with this type of thinking, believe that you should not keep your money solely in cash. You should be looking to keep them in some type of asset that will increase or at least not decrease in value with as much as the inflation will cause the US dollar to decrease in value. So we're talking gold, precious metals, real estate, or you have another choice. You could go with an asset class that has increased exponentially the last 6 years and is an answer to the federal government being in control of your money. It puts the people in control of their money from all countries, from all over the world. And it has been shown to be an excellent store of value. And obviously that is Bitcoin and some of the other cryptocurrencies that have very high utility and are showing that they're going to be very functional and have very high use. So that is a recommendation. Do your own research, decide what you need to do for yourself. But I am presenting the news and also one school of thought. So you can find me on the Best of Us Investors Network, on the cryptocurrency part of the Discord, and we will see you soon.